Hi there! If you clicked on this video, you've probably heard about something called Bittensor subnet tokens and wondered what on earth they are. Don't worry, I'm going to explain everything from scratch, assuming you know absolutely nothing about this topic. Think of this as your friendly introduction to a new type of digital asset that combines artificial intelligence with blockchain technology. By the end of this video, you'll understand what these tokens are, how they work, and whether they might be worth your attention. I promise to keep the technical jargon to a minimum and use lots of real-world examples. If I ever use a term you don't recognize, I'll explain it right away. We're all learning together here. Before we start, there's a great article by Unsupervised Capital that goes deeper into this topic. I'll put the link in the description if you want to read more after watching. Let's start with the basics. You know how you can buy shares in Apple or Google. Well, subnet tokens are kind of like buying shares in AI companies, except these companies are actually computer networks that provide AI services. Imagine if Netflix wasn't a single company, but instead was a network of thousands of computers all working together to recommend movies. And imagine you could buy a piece of that network. That's essentially what subnet tokens represent. Ownership in networks of computers that specialize in different AI tasks. Now, you might be wondering how this is different from Bitcoin. Bitcoin is like digital gold. It's valuable because it's scarce and people agree it has value. But Bitcoin doesn't really do anything productive. Subnet tokens, on the other hand, represent networks that actually provide useful AI services. For example, one subnet might be really good at understanding and generating human language. Another might excel at recognizing objects in photos. Yet another might specialize in predicting market trends. Each of these networks has its own token that represents a stake in that particular AI service. Here's where it gets interesting. The value of these tokens is supposed to be connected to how useful and popular their AI network is. If lots of people want to use a particular AI service, the token representing that network should become more valuable. It's like owning stock in a company that becomes more profitable. The tokens also give you certain rights, like voting on how the network should be run or earning rewards when the network performs well. It's a bit like being a shareholder who gets dividend payments when the company does well. This is where things get tricky, and honestly, most people are just guessing right now. But let me share some ways that experts try to figure out fair prices for these tokens. The first way is to look at how busy the network is. Just like a restaurant that's always packed is probably worth more than an empty one, an AI network that gets lots of use is probably more valuable. We can count how many AI requests the network processes each day and use that to estimate its worth. Another approach is to think about the size of the market the AI network is trying to capture. Let's say there's a subnet that helps businesses write marketing emails. We can research how much companies spend on email marketing tools each year. Then guess what percentage of that market our subnet might capture? There's also the replacement cost method. This asks, if someone wanted to build a competing AI network from scratch, how much would it cost them? This includes not just the technology, but also attracting users, training the AI models, and building a community. The token should probably be worth less than this cost, or else someone would just build a competitor. We can also compare similar subnet tokens to each other. Kind of like how real estate agents compare similar houses in the same neighborhood. If two AI networks do similar things, but one token costs twice as much, that might indicate which one is overpriced or underpriced. Some people try to predict future earnings from the network and then calculate what those future earnings are worth today. This is like figuring out how much money a rental property will make over the next 10 years, then deciding how much you'd pay for it today. The challenge is that all of these methods require making educated guesses about the future, and the AI industry is changing so fast that those guesses could be completely wrong. One thing that attracts many people to subnet tokens is something called APY, which stands for annual percentage yield. This is basically the interest rate you can earn by holding or staking your tokens. Some subnet tokens offer really high APY. We're talking 20%, 50%, or even 100% per year. To put this in perspective, a savings account might give you 1 to 2% per year, so these numbers look incredibly attractive. But here's the important question. Where does this high yield come from? There are two main sources, and they are very different. The good source is real revenue. If the AI network earns money from people paying to use its services, and that money gets shared with token holders, that's genuine income. It's like owning stock in a company that pays dividends from its profits. The concerning source is just printing new tokens. Some networks create new tokens out of thin air and give them to people who stake their existing tokens. This might sound great, but it's like a company paying dividends by printing more shares. It dilutes the value of existing tokens. Here is a simple way to think about it. If a network is paying you 50% APY but creating 50% more tokens each year, you're not actually getting richer. You have more tokens, but each token is worth less. High yields can also create a problem where people sell their rewards immediately, which puts downward pressure on the token price. It's like getting paid in company stock but immediately selling it. If everyone does this, the stock price falls. Okay, time for some honest talk. I think most subnet tokens are currently overpriced based on the actual usage and revenue. The AI hype has gotten ahead of reality in many cases. Here's what I'm seeing. Tokens with similar prices despite having completely different levels of actual use. It's like two restaurants having the same valuation, even though one is packed every night and the other is empty. The market hasn't figured out how to properly value these different networks yet. Many people are buying subnet tokens without really understanding what the underlying AI network does. They see AI token and high APY and get excited, but they haven't researched whether the network actually provides valuable services that people want to pay for. However, I don't think all subnet tokens are overvalued. Some networks are genuinely providing useful AI services and building sustainable businesses. The challenge is identifying which ones. I also think we're still very early in this market. As AI becomes more important in our daily lives, the networks that provide essential AI services could become extremely valuable. Early investors in the right tokens could see huge returns, but there are also significant risks. Many of these projects will probably fail as competition increases and the market matures. The regulatory environment is uncertain and there could be technical problems or security issues. My advice for beginners is to be very cautious. Don't invest more than you can afford to lose completely. Do your research on the actual AI service being provided. Look for networks with real users and real revenue, not just high APY promises. If you do decide to invest, consider it more like investing in early stage startups than buying established stocks. The potential rewards are high, but so are the risks. We've covered a lot of ground today. Let me summarize the key points. Subnet tokens represent ownership in AI networks. Their value should theoretically be tied to the usefulness of those networks. There are several ways to estimate their worth, but all involve guesswork. High APY can be attractive, but understand where it comes from, and the current market is probably overvaluing most tokens. If you're interested in learning more, definitely check out that Unsupervised Capital article I mentioned. The link is in the description. It has more detailed analysis and data that builds on what we discussed today. Remember, this is a rapidly evolving field, and what's true today might change tomorrow. Stay curious, keep learning, and never invest more than you can afford to lose. Thanks for watching, and I hope this helped demystify subnet tokens for you. If you have questions, leave them in the comments below. Like and subscribe if you want more beginner-friendly crypto and AI content, and I'll see you in the next video.